Hey everyone, have you ever wondered why some traders consistently make money while others, despite trying seemingly everything, just always struggle? What if I told you there is one technique? It's a fundamental technique that can completely transform your trading, and it will help you deliver consistent profits time and time again, year after year. And it's much simpler than you could imagine, and much more powerful than you can imagine. Hey everyone, I'm Brandon, and for over a decade I've been navigating the markets. I've been learning, testing, experimenting, refining, done really well, made some mistakes, but what I'm about to share isn't just theory. It's really been the bedrock of my success. It's a technique that's allowed me to turn inconsistent trades into consistent gains. And if you're looking for the real secret to profitable trading, you are in the right place. Today I'm going to reveal what it is, and I'm also going to tell you about the power momentum strategy. So, what is this one technique that's transformed my trading? It's really something that every successful trader understands at a fundamental level, but really honestly, very few people master. And it's always having a clear, repeatable trading system. And that system that has been the most consistent, the most reliable, and to be honest, the easiest for me after trying countless approaches is what I call the power momentum strategy. So this power momentum strategy is built on identifying stocks that are showing strong, undeniable upward momentum. And it's primarily designed for position and swing trading. There's some things about it like letting your winners run that are very helpful, but the principles extend even into day trading. And it's based on a very simple yet very powerful rule of momentum. So first off, we're going to look at the S&P 500 index SPY and just kind of go over the parts of the system and see, is the S&P 500 following this power momentum strategy. So basically the first thing we're going to look at is this purple 200 moving average. As you can see, it's going up and to the right. It looks strong. And we're just going to ask ourselves, is the stock price over the 200-day moving average? And as you can see back here in late April, early May, we gapped over and the stock price finally went above the 200-day moving average after back here dipping below it. And as you can see, when the stock price went below the 200-day moving average and lost its long-term momentum, it was definitely bearish. It was not a time to be buying the S&P 500. And as you can see now, it's crossed over that 200-day moving average, and that's a big bullish indicator. And then we're going to confirm it with the midterm momentum. So the other two indicators are this blue 50-day moving average and this red 100-day moving average. As you can see, really recently, within the last couple of weeks, that blue 50-day moving average crossed over the 100-day moving average, which is bullish. So basically just recently, everything lined up for this power momentum strategy, meaning that the 200 moving day average is below the stock price and the 50-day moving average is above the 100-day moving average. So the long-term momentum's there and the midterm momentum there. So what are these green channels These are the Keltner channels. They're similar to Bollinger Bands in some ways. They've got this dotted 20-day moving average in the middle. And basically, these just kind of help you see where the stock price kind of has gone. And it helps you time. It helps you figure out when is the good time to maybe trim or sell a stock, or buy or add into a stock. And we'll get into that a little bit more, but I think the easiest way is just to go over some really popular stocks and see how they stack up with the system and how they fit. So let's start with NVIDIA. It's often cited as the top stock by retail investors. It's fueled by the AI boom. And so we're applying the power momentum strategy. We check first to see if the stock is above the 200-day moving average. And if you look back, not too long ago, in early May, the stock price climbed over the 200-day moving average that's here in purple, which means good. We have the long-term momentum, so check number one. So now we're just looking at check number two, just to verify with the middle range momentum. And as you can see, very recently, like early July, late May, the stock price the 50-day moving average did go over the 100-day moving average. So check number two. That means the power momentum strategy is in place. The long-term momentum's there because the stock price is over the 200-day moving average, and the midterm momentum's there. The 50-day moving average actually very recently and somewhat bullishly crossed over the 100-day moving average. So now how do we time getting into a position like this, or how do we do that? That's where the Keltner channels help. And basically with these Keltner channels, the rule is inside this Keltner channel is a fair buying area. Now, when the stock's above the Keltner channel, it might be a little bit on the risky or pricier side. And when it's towards the bottom of the Keltner channel, it might actually be a bit of a bargain, as long as the stock follows the strategy and is strong and is a quality stock. I actually will have the confidence to buy a stock when it's dipping below. But ideally, if you kind of really want to play the percentages, you want to buy and sell the stock inside this Keltner channel, probably even close to this 20 moving average is a nice fair spot to buy it. If you want to be really aggressive, you can buy it towards the bottom of the Keltner channels. For example, right here was an interesting spot. And if the stock's way above, like right here, it's way above this Keltner channel, you might not want to buy it. You might want to wait till it pulls back. And it usually does. If you look at, historically, here's a spot where it was really high above the Keltner channel and it pulled back to the middle of the Keltner channel. Here's another spot where it was high in the Keltner channel, pulled back all the way to the bottom of the Keltner channel. Would have been a nice buy area there. Here's another stock that was high in the Keltner channel, pulled back. Right now we're floating on the top of the Keltner channel. If you really like the stock, you can buy it maybe, but I personally am going to wait until I see it float towards the middle or the bottom before it's a go for me. But overall, NVIDIA does have the power momentum. So let's go to another popular stock, Tesla. Tesla's interesting. The 200-day moving average is above the stock price. It's a very interesting stock because everything's all together right here. It could go one way or the other. The 200-day moving average is right around the stock price. The 50-day moving average and the 100-day moving average, they're all basically jumbled together right here. Recently, the 200-day moving average was above the stock price. Not a good indicator. And the 50-day moving average has been below the 100-day moving average. So this has been a stock that we've wanted to stay away from according to this power momentum strategy. But boy, is it one that you want to keep an eye on. If this stock has a couple of strong green days or a nice week or two and it starts floating up in price, all this will turn up. The stock price will be above the 200. The 50-day moving average will likely go above the 100-day moving average, meaning that all the checks are marked for this power momentum strategy. And then it's just a matter of just buying decent prices. So let's go on to another popular stock and see what Apple looks like. As you can see, Apple's kind of a tough one to judge. This is basically a giant stock that lots of people own. It's a cornerstone holding of a lot of investors, and I'm always running into people that own Apple stock. And just to kind of view it, hey, well, let's see, where's the long-term momentum? Well, here's this 200-day moving average right here. And if we kind of go back, it crossed under it back here in March. This would have indicated that it lost its long-term momentum. And as you can see, it kind of bounced back up to the 200. There was a lot of liquidity or sellers there, and it just didn't recover. And it's been kind of under it ever since. So right there tells me that this does not fit into the system. And it's not a stock that I'd consider to buy under the power momentum strategy. But just to confirm, it also lost. This 50-day moving average also crossed under this 100-day moving average, and it hasn't even regained that. So it doesn't even have it doesn't even have the midterm momentum. So this is very bearish. Until the stock recovers and the price gets over the 200 moving average and the 100-day crosses over the 50 moving average, I'm not going to be buying this stock thanks to the power momentum strategy. But it's not to say it's not a good company and a good stock, but right now it's just not a buy. Amazon, another popular stock. It's a powerhouse in e-commerce and cloud, and similar to Apple, we look for the sustained trend, and it had some rough goes right here. This 200-day moving average, you can see the stock price went below it, bounced up, and then stayed below it, very bearish. Also, this 50-day moving average was under the 100-day moving average. But really recently, things have changed. It gapped up. The price is above the 200 moving average, so there's a check. And then right now, it hasn't quite crossed over yet, but any day, unless the stock price just tanks, any day this 50-day moving average is going to cross over the 100-day moving average, which is bullish according to this system and means it's a buy. And so really it's about timing. Where in the Keltner channels do we want it? We'd want it in that middle of the Keltner channel, and this stock could be a buy any day. And so keep your eyes on Amazon. Another stock that's really popular, you wouldn't necessarily think it, is waste management. Waste management is something different. It's not flashy. It offers stability and growth. Usually, in theory, it should be strong in even down economic cycles, and when the economy's not so hot, everybody still has to throw their trash away. So, does waste management's chart exhibit the steady upward momentum that the power momentum system thrives on? Sometimes these quieter stocks can be really perfect fits for good gains. And when they're less volatile, they cannot even trade leaps and options with them without having to have the big, huge swings. And so these are sneaky good stocks for this strategy. And if you like position trading, these might be something where you're adding and taking away, but still holding a core position. And so basically, right around here, everything got real tight. This is in late January, and if you can see it, barely just lost that 50-day moving average, went right under the 100-day moving average. And the stock price kind of dipped below this 200-day moving average in these areas, but it recovered. And right here was a nice spot where the 50-day moving average went over the 100-day moving average. The stock price strongly went over the 200-day moving average, and it's been kind of a steady climber ever since. Right now, the stock, as you can see, using the Keltner channels, it looks like that's a fair to good buying opportunity. It's kind of not been so hot in the last few weeks. As you can see, it was well above the Keltner channel here. It would not have been a buying opportunity, and it was right. It dipped. Now we're dipping. It could continue to dip. As you can see, it does kind of like to go towards the bottom or even beyond the bottom of the Keltner channel. So I wouldn't be surprised to see it dip even further, but this is a stock to look at according to the power momentum strategy to buy. It's got the long-term momentum being above the 200 moving average. The 50-day moving average is above the 100-day moving average, again indicating the strong mid-term momentum. And it's been kind of going in a nice upward to the right slope for a long time. And it's just a matter of timing that buy. And, this would be something where if you're in a position trade, you might add to it down here. And if you're swing trading, you might buy it with a plan to sell up in here. So that's kind of how you're using these Keltner channels for either position or swing trading. And by the way, even in day trading, it gives you an idea where the stocks might want to go. So let's look at kind of the opposite in some ways of waste management, Palantir. Equally, or actually probably even more popular. It's frequently the most, or one of the most high volume stocks out there. And it's a tougher one because it's more volatile, but boy, has it just been a strong stock for a long time. The price has been over the 200-day moving average for a long time. The 50-day moving average has been over the 100-day moving average for a long time. It's been going up and to the right for a long time. So really, this is more like a stock that you just want to figure out, where you would time buys and sells. And if you kind of look at it, here's this. You kind of look right here. The stock just shot up, gapped up, and went well above the Keltner channels for a long time. And these would have been areas where you kind of stay away from the buying and just kind of be patient and hope that eventually it gets back down into that Keltner channel or to the bottom. And it did. It finally sold off big time, went all the way from about 125 down into 75. So, and down in this area, if you were a person that believes in this power momentum trading system, you might have bought it thinking, hey, it should recover at some point. And it had its ups and downs, and it kind of even went lower. Might have even stopped you out if you'd bought in this area. But it did eventually recover. So if you're more of a long-term or a position trader, it probably would have been a decent buying area for you, or even here, well below the Keltner channel. Right in this 65 area would have been an outstanding buying area. And since then, it's pretty much just gone straight up. It hit the top of the Keltner channel, and then it's gone back down, and now it's, according to the system, in a pretty fair buying area right in the middle of the Keltner channel. And to be honest, if you kind of look a little deeper, there's a nice deep cup right here, a very deep cup, and a nice handle right here. And so this is a stock that could just break out of this cup and handle and take off again. And so this is definitely one to keep an eye on. I'm going to go over one last stock because Bitcoin, MicroStrategy, iBit, these are really popular. And basically, it's a stock that's not only popular for being a Bitcoin stock, but because it's really volatile, which can be a good thing or a bad thing. But this power momentum strategy would actually basically say that it's a buy. The 200-day moving average is right here. The stock price is well above the 200-day moving average. The 50-day is above the 100-day moving average. And it's been kind of beat up lately. And so it's right in that bottom to middle of that Keltner channel. It looks like it could be something that could be a buying opportunity. So it's another stock that looks good. Now, just out of fun, we'll look at one more, the QQQ, and we'll just see where we're at. Basically, the Q's one of the best performing ETFs. Just took a dump after it hit all-time highs at 540, and it just kept going down. As you can see, it went well below its 200-day moving average, which was not good. and then it even lost the 50-day moving average below the 100. But it's really had a V-shaped recovery, and the 200-day moving average was the price finally went over it. And so that portion of the power trend has been recovered. And then now this 50-day moving average, not too long ago, crossed over the 100-day moving average. All very bullish. So now everything looks like it's lined up as far as long-term momentum, mid-term momentum, and just a matter of just timing. Right now it's towards the high end of that Keltner channel. It's not necessarily a buying area. You want it to float down or go all the way down to the bottom. And that also allows you, when it does go towards this bottom, to manage stop losses. Another nice thing about this system is you can just kind of use this 200-day moving average as a stop loss area. And as it floats down into the Keltner channel, it's a reasonable spot to put stop losses. And it's not really, really far away. From here, 530 all the way down to 495 is a pretty steep loss. But if you're getting more into the 500, 510 area, if it dips down, then 495 is not such a bad loss on a stop loss. So you can set good stop loss areas when you're a little bit more patient. So as you can see, this power for right now, the S&P 500 and the QQQs look like they are fitting into that power momentum strategy, and so it makes things really easy. So here's the crucial question: if the system is so simple, why don't more people use it and succeed with it? And the answer isn't in necessarily the indicators in themselves or the system, but I think it's that people don't know about it. Really, the systems that I've seen and followed and tried are a lot of breakout systems. Getting growth stocks, looking for them to break out above the cup and handle, breaking out above resistance, and buying hot stocks, breaking them out. Just a lot more risk involved in that, in my opinion. And basically, that's why I like this system. It helps me get decent buying areas. It helps me know whether stocks have the momentum. And it helps me, I like dip buying. It helps me set tighter stop losses and then sometimes get better bargains. And I found this to be by far the most consistent system, and the one that wins the most often. And I've experimented with following parts of it or not following all of it, and usually these indicators really help. When the 50-day dips under the 100-day moving average, it makes it a lot harder to win with a stock. And when the price is below the 200-day moving average, it makes it really hard to win. So this just makes things very easy and very simple, and at the same time it's extremely effective. So this is precisely why I use this system, and it's allowed me to kind of get away from day trading. I find day trading to just be far too intense, too much work, too much time spent in front of the desk, and really I prefer position trading or swing trading over day trading. It's much more passive, it's easier, and in my experience it's ultimately been a lot more profitable. Swing trading is designed to give you kind of freedom and flexibility, and so you're not glued to your screen all day. And on top of that, if you're position trading, it's really not very time consuming. You can spend about an hour a month just looking at your positions, looking at where they're at, if you need to trim them, cut them, buy them, or adjust stop losses, however you need to manage them. And then really, if you're position trading, you might just have 5 or 10 positions, either ETFs or stocks that are pretty solid, and about 3 or 4 times a year you're adjusting them, and maybe you get rid of a stock that lost its power momentum, or maybe you're adding something in. You can set alerts for stocks that you really like, that are solid, that you're waiting for them to dip. You can add them into your positions, and it's just pretty easy, much more passive. One of the biggest mistakes many traders make is obsessively watching charts. And I think using the system like this lets you improve your edge. But really, the more you watch, the more you might interfere with your own system and second guess trades and make impulsive decisions. So a well-constructed trading system based on clear entry points, exit points, good stop losses is the best approach I've found. And it'll let you step away and just let the system do the work. You can kind of let the stocks that are doing well continue to do well. And it also just protects your mental peace. It helps you stick to your plan without getting emotional. It's if you follow the stock market news, it can be a wild ride and a wild swing. So think about it. Every successful endeavor, whether it's building a business, mastering a sport, becoming a musician, a martial artist, it's really about having a structured, repeatable practice and plan. So you just don't wing it, and that really leads to success. And trading is no different. Investing is no different. You need a plan that gives you a good entry target, a good profit target, a good area for managing risk with stop losses maybe. And you don't need to know exactly to the T when to get in, when to get out, when to take profits. And most importantly, when you're wrong, you know when to get out. You don't have to be emotional. You don't have to wonder. If the stock price goes below the 200-day moving average, you might start thinking about getting out. If the 50-day moving average goes below the 100-day moving average, you might consider trimming or getting out of the position. And that, and all to the opposite. If the stock price goes over the 200, if the 50-day moving average crosses over the 100-day moving average, then it should give you some confidence to buy. And so I've made probably thousands of trades over the years with this system. And really it's been the highest percentage success. And it's really had me just decide to stick with it. And so my success isn't luck. It's the results of applying this plan and system and learning some nuances and getting better at it. And also I personally like having quality stocks, although part of my portfolio is high growth stocks, companies like MicroStrategy and Palantir. So what is that true one technique to transform your trading skills? It's basically having a system, having a plan. And it's not just that. It's the ultimate game changer is the execution of a repeatable plan that's fueled by objective analysis. And if you journal and keep track of your plan and get good at it, you only become better and better. So if you're serious about taking your trading to the next level and implementing a system that actually works, then it's time to act. If you found value in this video and want to see more insights into the power momentum strategy and stock analysis and real trading techniques, then hit that like button right now and subscribe so you don't miss any of my future videos. And if you know, really more so than that, leave a comment. Is this a system that you would use? Do you have a better system? I'm open to hearing and learning if there's something better than this. I haven't found it yet. And so if you've got something better, please feel free to post that. Or if you have a question or a stock, leave a comment. So thank you so much for watching. Remember that consistent success in trading isn't about luck. It's about a consistent, powerful plan and system. And until next time, trade smart, and I will see you in the markets.